Welcome back to the Broker Power Up podcast, the AIME podcast for strategy, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon and Haddad. How are you?
Another day, another dollar,
Here we are.
is
Here
what
we
they
are.
say.
We have it is, and we have a lot to go over today.
Yes, we do. I'm wearing my Pinky in the Brain shirt, little NARF
Narf.
action over here because that's the type of week we're having, my friends. But ready to go, excited. Weather's been unbelievably all over the place where you and I are at. It is having its own thoughts and emotions, and it is driving us crazy here on the Midwest to East Coast. I'll tell you that much.
Absolutely. I cannot get enough sleep right now when it goes from negative 20 to 50 degrees. My body is just like, what is going on? Sinus pressure. But we have a lot going on. We have the Broker Buzz, where we dive into the top posts of the week from the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we're going to have a sales pitch training where John helps us become better salespeople, where we're going to talk about some big changes, possible changes to how lenders and LOs work. So you'll want to stick around for that. And then we will wrap things up, as always, with story time with John. But first, we have a fortune cookie. And because I'm at home, I'm just taking all the broken ones that broke on my trip to Fuse and back. Because it's a lot easier and doesn't make a mess on my desk. So, today's fortune. Good energy will surround you wherever you go. Thanks.
Nice.
Nice.
So this one, I'm going to go a couple layers deep on here. Good energy surrounds you everywhere where you go, only if you have been taught how to be the energy, the positive energy, right? Like
I like that.
I think learning how to become positive energy is no easy feat. It requires an unbelievable amount of mental discipline where, you've met these people. I think a lot of us have met them where you ever walk into a room and that same guy or gal just always got a smile on their face. Everybody gravitates towards them. They just got something about them, as we say, like something about that person. We've all met them, and that takes time to learn. I've been fortunate to meet a lot of great people like that. My mentor being one, Stephen Luigi Piazza, who the guy, like, if you didn't know him, you would think it's a front. Like you would think, he's all right. He's just being like, because it's, oh, yada, yada. He's not at all. He's just every day. The guy loved life with such a burning desire and passion. And he just exuded that. And for some people, if you're not used to it, you can think it's a front. But there are some people that get to that level in their life. And if you meet them, get to know them, ask them as many questions as you can. And God willing, one day you become that person. And there is truth to that fortune, but I think there's more layers to it if we just don't take it at face value. What about you?
Oh, absolutely. I think it's definitely what that energy is self-made, where, like you said, you walk into a room and people gravitate towards you. People know, they see you walk in, you're smiling, and say 2 or 3 people in a room of 15 come over to greet you. That's because you know those people and they know your energy and they basically want to be energy vampires. And
Energy vampires reminds me of
just like, yeah, what we do in the shadows. Yeah, exactly. That's the exact metaphor. So it's basically not that they're intending to do it, but that's why people can be attracted to other people, is just like, oh, they have good energy. I want to surround myself with that energy. So let me go greet that person. Let me go say hi to that person. Let me go learn something, because they always have some little tidbit of information that they share every time I talk with them, kind of a thing. So I think if you just have that, I like to have that little random factoid in my back pocket whenever I go to an event, because it's something that I think anyone would go, huh, that's interesting. And it's specific to the event, right? Like you don't want just a random, did you know in 1947? But it's just having a little factoid that's relevant to that event to be like, to break the ice, to start a conversation. I think is, and then someone else say they come over like a minute later and then they're like, oh, what are you talking about? Then you can kind of restart that and you can replay that conversation as many times to get you throughout the day. Because I watched some video. I don't know how true it is because it's just a video. It's not. I didn't fact check it or anything. But how there's introverts, extroverts, and there's like something in between, like an outrovert, that's more like just recharges differently. It depends. They can be an extrovert, they can be an introvert, but it depends on the room and who's in the room. I'll try and find it and put it in the
Yeah.
notes, but uh, that's what it means for me today.
Yeah, it's I don't know. I feel like I can shift into that person. Like I can be intro, extrovert. It just depends on the environment. So I bet there is something in between. Just those types of people.
Oh, yeah, it was really interesting, and it, like, depends on what people you're around and where you are and the familiarity and, all these different things, and I was just like, "Huh, that sounds like me," but also, I feel like a lot of social media is just like, "Huh, that sounds like me." So, I don't wanna give it too much, credit without fact checking it first. But let's dive into the broker buzz with our first question of the week. Broker owners, how much are you paying junior loan officers that you feed leads to? Right now, I am the only originator and have two assistants looking to add a junior who can sell a bit and set them up with my leads and pay them on my production. Any suggestions are very much appreciated. Thanks.
Yeah. So this is how most of my businesses ran today at this point, especially with leading AIME and my other company. So I still bring in a pretty hefty chunk of business in the door. And look, one, it depends on the book of business that you have, right? And where you're handing off the client. Like if you're getting a purchase agreement, right, where it's like that's gold, that's liquid gold, where you're saying, hey, another loan officer, here's a purchase agreement. This client's ready to move forward. So I pay a lot less on those than I would pay if somebody's taking it from pre-approval to finish. I'm going to go between 25 to 75 basis points. I've heard of some people push to 100, but again, it just depends on how you're bringing the lead in. If you're just if you're a lead source and you're doing some Facebook advertising and the leads come in the door, that's that's something you really got to consider. Here's something I will tell you. And again, we pay out in bips, it can't be percentages, but you don't want to be in a 70-30 situation. I'm sorry, you want to be in a 70-30 situation. So whatever that might be, you want whatever that looks like for you, wherever your bips are set up at as a broker, you want to be on that 70% side of it and the person getting the lead on the 30% side of it. That'll generally lead you to have decent margins and the ability to help them grow their business while you're still making some money. Because the idea isn't for them to only work your business forever. You'll find some people like that. For the most part, that's just not a thing. The idea is, hey, I'm helping you supplement while you learn the business. You're going to help me out. You help me with my files. That should be the game plan. But 25 to 75 bips, depending on the type of lead that comes in, just from soup to nuts, where you got to do everything and figure it all out. Yeah, I'll pay a little more. But if it's just a purchase agreement coming in the door, I'm definitely not paying a lot of money to that. So 25, 75 bips, you work it out accordingly based on when you give the LO the lead.
Yeah, I think that makes a ton of sense of just how much work is then left in the sale, right? So if you judge it by that, opposed to just
Well, that's exactly it. Like I've had some, and again, some people are going to argue with me on this, and I don't care. It's just a matter of doing this for as long as I have and building my business model exactly like this. What happens is you get to the place to where you're making money on the deal, right? And then the LO at some point will ask you, like, well, I think I should make more. You made, let's just say that a loan makes $10,000. Okay. And if I'm paying the LO 75 basis points on that $10,000, depending on the loan size, right? That LO, let's just say it's let's call it a $400,000 loan. Let's make it easy. So if it's a $400,000 loan, 75 basis points on that loan is $3,000. That's being paid out to the loan officer. So it's a percentage of the loan amount itself. So that means the other 7,000 is going to you, the broker owner. That to me is a really hefty chunk of change that you're giving somebody if they didn't have to do that networking, right? Like the grind, my brand, all the videos that I do. I mean, this is years in the making for me. So I really take that very personal, and I did it up front. One of the biggest mistakes I made up front is like just handing them off to whoever, which LO. Like for my junior LOs out there, you got to earn it. This has taken me 14 years in the making. It's not like somebody gave me a handout. It's not like somebody gave me free loans. I never got that. So if you're getting that opportunity, be grateful, but then have a lot of conversations surrounding it.
Yeah. No, that does make sense because I was thinking it's just how much work was left in the sale, but also you're right. You had to put in the time to be able to get those. And that
Yeah, like
is
people ask me, like, John, how do you get conventional loans? Years and years of conversations trying to work with, the best of the best agents I possibly can.
absolutely. Well, I hope that answers your question. I learned something for sure. And our next question, I have a friend who just started a new job, but in the same field he's been in for years. He is paid a base salary, a car allowance every 2 weeks, and commission. He just started this new job in January. I know I can't use the commission as he was paid out on a bonus in previous employment and not specifically commission. But I'm wondering which lenders will allow for use of the car allowance given we don't have 2 years of previous car allowance pay from this employer to show it's clearly stated in his employment contract that he will receive this pay, and pay stubs are showing the pay. Thank you in advance.
So you could actually file an exception for this. It doesn't mean it's going to get granted, but it sounds like previous employments over 2 years from what it looks like having the car allowance. I would ask for an exception, whether it's FHA conventional, give all the documentation. If you have the contract, like get the contract that showcases they're going to continue to get it. Get the year end pay stubs from his other job for the last 2 years. The year end pay stub will show the car allowance on there. So that'll help you as well. Written verification of employment. You have an updated pay stub. This is worth an exception all day. You might have a crack at this. Not saying it's a guarantee, but there might be a lender willing to submit this to Fannie, Freddie, FHA, even VA, and give you a shot at this. But it's absolutely worth the exception. Get all that documentation, ask them to submit it, and wait to hear back from credit policy.
Absolutely. And our last one, a reminder that if cauliflower can become pizza and a potato can become vodka, then you, my friend, can become anything you desire. You can do it. Aim high.
No pun intended, my friends, but we are aiming
I almost
high.
added an E
Oh,
to the aim
just
high.
you should have put
But-
parentheses. You know how they
Yeah.
fix them, parentheses.
Yeah.
But I love it. I know we're having fun with some of these last comments or questions or whatever it might be, just like last week. But that's what confidence is. Like confidence is your ability to build on something, find a little bit of success, and then be so delusional that you think you can do anything. And and then all of a sudden you accomplish it. You're like, wait, maybe I am that guy or gal that I've always thought I was going to be. And I would recommend y'all that you work as hard as you can to protect your mind every single morning before you start your day. That'll help with the belief system, whether it's affirmations, journaling, conversations with, loved ones or therapists or whoever it might be that helps get your day going. Your morning routine, protecting your mind. I know it's a joke, but it's also very real. You have the ability to set your mind up for the day. What you're pouring into it is what matters the most.
Oh, absolutely. And it's just one of those things where you walk into a room of professionals and you have to, the first person you have to tell that you're a professional is yourself.
Mhm.
And if you don't believe that, no one in the room will believe it either. And they'll sense it. So you have to believe it first. And then, so you have to believe that you, the cauliflower, can become the pizza. And it's just important to be able to uh, see that in yourself because, and just yesterday, this, when I was searching for questions and posts and stuff, this one struck a chord because I was pretty tired and exhausted. And I was just like, yeah, I can become a pizza. And I don't know, it just stuck with me. And I hope that it, and I had cauliflower pizza for dinner.
I love it, dude. No, it is like sometimes it's silly as it is. Like sometimes you just need those little things.
Yeah. And so I hope that someone else got a little smile out of this as well. If you would like your question answered on the Broker Power Up podcast, be sure to use hashtag Broker Power Up when making your post in the Brokers Are Best Facebook group. If you are not in there and want to become an AIME member, check out this ad and we'll see you on the other side for some sales pitch training. We'll be right back.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com/membership. Your community is waiting.
I'm waiting to become a better salesperson. John, what do you got?
So today, what I'm going to do, y'all, is different. I'm actually going to go through an article that was just posted that I think is very important. So no sales tip, no story time. Well, I guess technically a story surrounding this. By the time you see this, it'll be about a week ago. The vice chair of the Federal Reserve, Michelle Bowman, came out in Orlando and stated that they have concerns about the migration of servicing going from banks, FDIC insured institutions, over to third party. That would be mortgage brokers, non-Del, other entities that are non-bank affiliated. So just to give you an idea, in 2008, banks originated around 60% of the mortgages and held servicing rights on about 95% of those. So I'm going to read some of this to make sure I get all the facts correct. So they did 60% of mortgages and serviced 95% of the 60% of the mortgages that they did. By 2023, those same shares fell to 35% of the mortgages, and now they're retaining only 45% of the servicing. So what they're saying is banks from 2008 to now 2023 went from 60% origination down to 35, and went from holding 95% servicing down to 45% servicing. So why did that change? A lot of it changed because in 2013, there was a lot of different treatments to how MSRs are being leveraged when it comes to banks. So mortgage servicing rights, that's an MSR. If you hold the MSR, the note, it's considered an asset. So if I have it, it's an asset that I have. It's generating revenue. In this specific case, the law was changed in 2013, which made it much more difficult for the banks to make money on these MSRs. They were basically it was being hit against them, and it looked like they were losing money on paper, so they shied away from it. So the reality is here, a lot of these banks just, they might not be as good at trading when it comes to hedges and making money on the secondary market. So if you don't know how to do it, you can lose a lot of money very, very quickly. That's another conversation for a different day, so I don't want to get too into that. So what she's proposing is a change on the allocation of capital treatment for MSRs. So they actually want to get rid of deducting it against this bank in totality. There's a few nuances that I would highly recommend you read into. So what does this actually mean? Well, it means that competition is going to open up if they want banks to hold more servicing rights. So they vetted out an article or research paper that says basically during COVID, banks gave a slightly less of an issue letting clients go into forbearance than the non-banks, is what the argument is. So Michelle's saying that this won't be bad for brokers, it won't be bad for third-party people, but the truth of the matter is, with AI and where everything is headed and how to leverage data, these banks have billions of dollars, right? It's a fractionalized system. Learning how to use this data, learning how to understand this data, getting them back into it, making it easier for them to get back in will absolutely cause more competition. I am sorry. There's just no other way for it to go besides more competition. And excuse my passion on here. The reason I'm passionate about this is I am so sick of these companies, or not just companies, but like, don't lie. Your end goal is to make money. So if you change a law and the law goes to the banks are only going to want to get involved what? If they know they're going to make more money. Why would they want to do this if they're not going to make more money? Why? You said it's more risk. You said there's potentially more litigation that can occur. You're telling them, hey, there's all this bad stuff with it, but can you come do it? We would love if you did it. Come on. What do you think the banks are doing? And that's the part to me that does piss me off a bit, Tommy. And again, that's not a bad thing, but just don't lie. No. These are for-profit organizations. If I'm a for-profit company, I'm the CEO, all right? Like, think about AIME for a second. Think about AIME for a second. If something pops up, there's an opportunity that pops up, does this help AIME grow membership? Right? And if the answer is no, it's not going to, why would I take the risk for AIME? Why would I? All right, Tommy, listen, we're going to spend X amount of dollars on this. And you say, John, well, will it help us bring in more members? And I say, well, I'm not sure. You're going to go, John,
then why?
Why are we spending the money? Maybe, can we do raises? Can we give bonuses? Can we look at my pay?
Even, right.
Rightfully so. But if I said, Tommy, this is going to drive in opportunity. Here's what it looks like. Here's the game plan. We're going to gain 1,000 more members. Yes, there's risk, but I think the reward outweighs the risk. All right, John, I'm in.
Yeah.
So these
completely different story
are doing the same thing. And so I highly recommend you do your research on this, you understand what it means, and then build the systems and the parameters around you to protect yourself and your business. Okay, what does that mean? That means go double check and read your lender contracts. Where are they selling servicing rights to? What are they actually doing after the loan is closed? What happens to your book of business? How long is there a solicitation on there for? Go read your contracts. And so I wanted to bring this to attention today. I don't want to do a sales tip or anything like that. I really think that this is going to be very important, and it's something I highly recommend, highly encourage you do some research on and find a way to protect your business over the next 3 to 5, forever, basically, but just find a way to protect your business. But that is what I wanted to talk about today.
Cool. And I will include that link to the article down in the description if anyone
perfect. Thank you.
wants to go and explore. But so what do you think? Just one follow-up question on that, because competition usually means good for the consumer at the end of the day. Do you think that there's a silver lining for the consumer?
Do I think there's a silver lining for the consumer?
Because that might make things a little bit easier for people to digest this.
I don't know if it will. Like, I don't know if there's a silver. They're already getting some of the best rates possible, right? Like, especially working on the broker side where it is cheaper on the wholesale. I actually think it opens them up for potentially. I think it opens them up for potentially more risk, if I'm being, because they now have your data. So think about it like this. Like, think about it just like this, okay? Yeah. Imagine you're with Chase Bank, all right? Chase is massive. They do good business. And I'm not saying Chase will do this. I'm just using them as rhetorical.
Yeah.
But just imagine it's with Chase Bank. You now decide to do a loan with Chase. You also have 3 credit cards with Chase, okay? Yeah. So now Chase owns your servicing, right? They also are on the note, or I'm sorry, on the title, obviously, because you don't own the house outright. But Chase can see the value of your home increasing because they own all that. They can look it up. That's just how it works. They look at their assets every year. They look at servicing, make sure they're not underwater. That's just how it works. Yeah. So they see Tommy's house gained $100,000 in equity. And then they also see that, oh, wait, Tommy also looks like he maxed out all 3 of his Chase credit cards. So imagine the call, how much easier it is. I say, Tommy, hey, this is Jonathan from Chase reaching out to you. I might have a solution for those 3 maxed out credit cards, and as a lifelong Chase client, I just wanted to put you in the possible best position for you and your family. It only takes us about 10 to 15 minutes to see if this makes financial sense, but I might have a really great solution for those 22, 23, and 25% interest rate credit cards. Do you have 10 minutes for me?
Yeah, these hobbies are getting really expensive, so freeing up that space would be great.
But how much easier of a call is that, Tommy? You see what I'm saying?
Oh,
Why is it
absolutely,
easier?
yeah,
Because it's
because they
John
know.
from Chase, and you're
Yeah,
like, "Oh, dude, babe,
yeah.
Jillian, it's John from Chase. They're calling." You think it's like this? Oh, I can't. It's like a miracle. Someone
He's
called
wearing
me. I need
khakis.
help. Yeah, that's dude, and that's the part I'm trying to get people to understand is this is business, and don't be upset with business, but just realize that these companies are here to make money, man.
And they have
Please
large brands and
stop.
large marketing assets to make you believe that your family, that they treat you like family.
Drives me crazy.
Oh,
That's
I
it.
agree.
That's what I got.
All right. Well, thank you, listener, for tuning into this week's episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor, hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to the YouTube channel, ring the bell to get notified every time we drop new content. Share this video with a fellow broker who could use a power up. Remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.